But we begin with the markets, as we always do here on NYSE Live. Investors are digesting the latest Fed decision, big tech earnings, and a dose of history as the S&P 500 touched 7,000 yesterday for the first time. Joining me now is Michael Ranking. He is the senior market strategist at the New York Stock Exchange. Michael, welcome.
Hi, Ashley. Good morning. Thanks for having me.
Of course. So glad to have you here. So we're about 30 minutes away from the start of today's session. Of course, the markets, S&P touched 7,000 yesterday. What are you going to be looking at most closely today?
Yeah, so it's one of those days where it just, there's so much going on. There's so many earnings reports. The macro environment is, very busy. It just feels like you're just drinking through, kind of a fire hose. Yesterday we had the Fed decision. As you pointed out, that was kind of a non-event. And then we had, kind of a wave of tech earnings, and markets are kind of really digesting that. And then we've also had just, kind of a ton of, kind of industrial earnings this morning, and you're seeing kind of, kind of a very mixed response. As you highlighted yesterday, the S&P 500 tagged that kind of big round number, 7,000. We did pull back. With where futures are, we're going to kind of test that again as markets open up this morning.
You mentioned big tech earnings. We heard from Meta, Microsoft, and Tesla yesterday. What were your biggest takeaways?
Yeah, well, the biggest takeaway is that everybody continues to spend on AI, right? So we saw kind of the CapEx numbers coming in well ahead of expectations. And you're seeing kind of a very mixed response, kind of within the marketplace, where Microsoft is trading off, kind of on on their Azure, their cloud business numbers, which were pretty much in line, but kind of a little bit of a disappointment, I guess, to the street. Whereas Meta, even though their CapEx numbers were kind of very high, kind of came in ahead of expectations, right? They've shown an ability to monetize that a little bit more. And so, kind of they're being rewarded, right? So there's this kind of focus on the spending and companies that are able to monetize that. Kind of within software, right? We've seen kind of a pretty mixed response as well. You have IBM moving, higher on, kind of very strong numbers. We have SAP, ServiceNow trading off, right? And that's one of those areas of the market that, people have been focused on, kind of on the idea that kind of AI is going to kind of really kind of derail, kind of that SaaS market, right? And so, we're seeing kind of a pretty mixed response. But the takeaway is that AI spending is continuing, right? That feeds through to other areas of the market, right? And if you look through at Caterpillar this morning, right? Caterpillar was the best performing, shockingly, the best performing stock in the Dow Jones Industrial Average last year. They had very, very strong numbers, right? And that's also, you don't think of Caterpillar as an AI play, right? But with the data center spending that's happening, the power and generation business, that they support, and now they're going to actually get the tailwinds from all the mining and just kind of the surge that we've seen in precious metals and the metals complex over the last year. That company is kind of clicking on all cylinders.
All right, and we also heard from the Fed yesterday.
Yes.
Some saying an uneventful meeting.
Yeah, yes.
What was your takeaway? Those rates, of course, remain unchanged as expected.
Yeah. So look, I mean, market expectations for when the Federal Reserve would move next have been shifting out as we have seen the economic environment kind of improving. We're coming out of the government shutdown, so we need to see kind of some of that economic data kind of normalize, right? And we're still seeing kind of a pretty resilient labor market. So a couple months ago, markets were looking for another rate cut in the first quarter. Now that's kind of shifted out, kind of to the middle of this year. Now, there wasn't a whole lot of drama in terms of monetary policy coming into yesterday's meeting, but with kind of the DOJ investigation of Chair Powell, the Supreme Court hearing with Lisa Cook, and kind of just this idea of Fed independence, that is where all the drama has been kind of focused on. And during the press conference, kind of Chair Powell showed us that he was a Disney, kind of a Disney fan, adding to that, kind of, we don't talk about Bruno from Encanto, saying we don't talk about other officials' commentary, we don't talk about the currency, we don't talk about court hearings. So, he kind of took the high road as we would have expected.
All right, and you said, that meeting and his remarks, of course, generating less buzz than in Fed meetings in the past. So yes, and anything else you're looking at in the market right now? Any other trends?
Yeah, so I think one of the things you have to pay attention to is what's happening in kind of the metals complex. That's kind of just a very, very it's turned into this kind of really momentum-driven trade, right? And you've seen kind of with the U.S. dollar weakness, we've seen gold moving higher, but now it's starting to bleed into other metals that are having a kind of more of an industrial use case, where you've seen kind of silver surging to start the year, right? And then just overnight, we've got copper prices that are up kind of over 10%, right? So that is something to kind of pay attention to. It seems like it's kind of really just kind of turned into this momentum trade. You're now starting to see kind of oil prices move higher on kind of the increased geopolitical risk. So there's been this focus within the market kind of on hard assets away from kind of more paper assets, things like crypto at the moment.
All right, and today York Space Systems is IPOing here at the New York Stock Exchange. What is your take on the current IPO environment?
Yeah, I mean, a very exciting IPO, right? Kind of the crossover of kind of space, satellites, kind of their involvement in kind of the big Golden Dome, right? And kind of some of that defense spending, right? So that is, kind of really exciting morning here. In terms of the IPO market, right? I mean, you could see last night they priced at the upper end of the range. They increased the size of the deal, right? That we've seen that a couple times. So the overarching environment, kind of for the IPOs is pretty solid. Kind of friend of the New York Stock Exchange, John Gray, president of Blackstone, kind of they just reported this morning, had very strong numbers. Kind of big private equity company. Kind of he said that this morning that he thinks that the IPO market has kind of hit escape velocity, right? And so they are kind of looking to start to bring a lot of their portfolio companies to market. So it seems like there is a lot of demand here, and it should be an exciting year.
Do you think we're going to see more IPOs as the year unfolds?
Yeah, yes, I do. I think there's a lot of I think there's a backlog of a lot of those kind of private equity companies that are looking to come to market, right? But then we also have kind of a lot of these kind of AI, space, right? There's a lot of these other kind of thematic kind of companies that have been waiting for the market to improve. I think we're kind of there. We have kind of the investor appetite. We have the retail investor is very involved in the marketplace. Kind of given just kind of some of the structural changes, I don't think that's going away, right? So it is and if we can kind of just keep kind of the volatility kind of contained to some extent, right? You'll continue to see that happen.
And of course, as we open this segment, we talked about the S&P hitting 7,000. Do you think we're going to stay in that territory? Do you think it's only up from here?
Look, I mean, I think there's always volatility, right? If you kind of look back, you typically see kind of a 5-10% pullback, right? But what's really, really been interesting is that if you look at, the S&P 500 is kind of sideways, really, right? We've like sideways to slightly higher over, kind of since the Halloween timeframe. But over that time frame, you've seen very, very significant pullbacks in the mega cap tech names, right? So the NYSE FANG Plus index is down over 5% over that time period, right? So just given the makeup of the index, it's hard to move higher without those companies kind of taking that leadership role, right? But with that pullback, you've seen the market continue to hold up, which points to this broadening and kind of the expansion of breadth within the marketplace. It's pretty positive. You're seeing kind of small and mid cap indices kind of hitting new all-time highs. The real key factor for that into the the remainder of this year is companies being able to put up kind of positive earnings and continuing to just kind of operate and show that operating leverage that they've put in place over the last couple of years, kind of focusing on cost mitigations and things of that nature. Should we see the economy start to accelerate, right, that will kind of help things move higher.
All right, Michael Ranking, Senior Market Strategist at the New York Stock Exchange. Thank you so much for joining us.
Thanks for having me.